All right, so the first thing we're going to talk about is with the daily power of 3 and just the wick size, right? So mechanically yesterday, my model would say it is bullish, right? And why is that? Well, we have a sweep of this previous day low and a strong bullish closure, right? So with that, could look for 0.5 of this to look higher, right? If we mark it out on ES, right? Mark that out, we left our highs to continue higher. Well, right off the open, you can see we get a gap up, right? So we're almost opening right at that previous day high, right? So the main lesson I want to talk about here is within expansion candles, we're generally going to have a small wick, right? So if we look at these down candle days or these expansion days, right? They don't have a large manipulation over their wick, right? You see that? A small manipulation versus something like this. If I was bearish and I see a wick of this size, right? So this wick here, I don't anticipate this candle to expand because it made most of its range with that wick, right? So if it was going to expand, it would have had to go like all the way down here. That just doesn't really make sense. So the analogy I use to think about it is, let's say we have an average daily range or a certain distance we can cover each day, right? So I think about that as like some rope, right? I only have a certain amount of rope every day that I can use. So if I'm thinking about, and this is what I was talking about today, is if I only have a certain amount of rope and let's say we'll just full screen this and replay. Let's say we open up, right? And we only have a certain amount of rope. We open up, we go all the way up here, right? Is it really likely that we use, or let me do it this way. Let's say we only have this much rope, right? Just kind of visualize that. Let's say we reach all the way up here, right? Does it really make sense that we could expand this day all the way down? No, right? We'd only have so much time and range, right? So it makes sense we could reach back towards the daily open or so, right? And that would form the wick, right? So a large wick, we don't really get that expansion of the body versus something if we reach higher, right? We have a shallow run over a previous day high, and then we can start to get that expansion lower, right? And that will only use so much of this, right? So then we can either expand a little more, right? Or come back into the range, right? Does that kind of make sense? So then today, I was bullish mechanically, but when we open up right next to previous day high, we take our previous day high, and then we have our, we'll go to the hourly chart, an hourly change in the state of delivery here. That is where I'm thinking, okay, we have a shallow run or a small wick above previous day high. That is where I'm thinking, okay, if we're getting expansion, we can expand lower, right? And so then we need to close below here. We get that, and then we drop lower, right? Now, just with how the daily candle formed and my bias, right? It makes more sense to target an opposing candle or 0.5 of this range than it would this low, right? If we were truly bearish though, I would have looked for an outside day. And if you think about it back with the rope analogy, because we had a shallow run, right? We have that possibility where we could go extend lower, right? But we don't, right? And so now I don't know what we're doing, still chopping around. Yeah. Does that kind of make sense with the wick? So for instance, I know AM has a section on it. Yeah, a rope analogy. I think about it as, we can go to a previous day. Let's pull this up. So I think about each day as we have a certain amount of time and we have a certain amount of range, right? So let's say I don't know, you have to think a little abstract is this is how much rope I get each day for the range. So if we hang around, right, and we do this, we've only used a little bit of rope and then we can still get the expansion of what's left, right? Versus we'll find another day, but right, you can see we can get and move higher and we make that range and time versus something with a large wick. Let's see. Let me go out to the daily and we'll find one. We'll use this. right? If we go to the hour here, it's not a great example, but if you notice here, we don't really get a shallow run and then go, right? We're using all this time. So as we just sit around, then we go like this and then back up here, does it really make sense using all of that range to then go expand higher in the same day? No, not really, right? It would rather wait for a new candle. And that's why my candle 2 closure works, because it used the range here, then we can expand the next day. Yeah, like gas or fuel in a car, right? Like the way that's probably a better analogy, right? And so if you think if we haven't gone anywhere in our car, right, but we're using all this gas, right, we're limited by time. Versus let's say we rip across the country, right? Now we're kind of limited on gas. We've used all of it. So it's kind of abstract to think about it that way, but that's how I view it. So that's, I don't know, we got off topic a little, but that's what I was thinking with this wick is, okay, we have a small shallow wick, a change in the state of delivery. We can still expand because we haven't made too much range, right? Then this candle, right, didn't really close very bearish. And if you look at it on ES, went all the way down. So good example on ES, if we only have so much range or places we can go, is we've already used all that range here. Does it really make sense to just completely expand today? Not likely, right? So that is a little bit abstract there, but hopefully that makes sense. Can't remember who exactly asked that, but I know I covered it now. So what other questions we got today? I mean, we can review what's going on this week. Actually, let's talk about oil here. We'll talk about oil really quick, and then we will get into your question, Kaz. So we did have a candle 2 closure, right? And there's a few things to think about this, right? That I want to talk about. So if we have a candle 2 closure, right? We're expecting this to respect 0.5 of the wick, right? But what's another thing we can expect? If we were using just 0.5 of this previous candle, right? Which it looks a little off. I don't know why it's there. Maybe it's today or something. Oh, that was the previous day. There we go. So if we're using 0.5 of the previous candle too, we can also anticipate price not to disrespect this, right? So what I mean, let's just clean this up really quick. If price is going to continue lower, it's going to respect 0.5 of this candle, right? If price is going to continue higher, it's going to respect 0.5 of this and disrespect 0.5 of that. So as we go into price action today, I don't need to do that. But as we go into that today, we'll clean this up. Mark out 0.5 of this wick here, right? And then it will auto plot that. So I want to see if we respect this area, right? Then we can go make a new low. If we respect this area and disrespect this, then we can go higher, right? Mechanically with the model, we would have to close over this level, right? So mechanically, there's not a setup until we close over this. But if you notice, how does price react? We respect the wick of this candle. We go and disrespect this. And then you can see we find support there. And then here's where we finally close over that. So once we close over that, we now know we want to see price respect from this open to the mean threshold of it to trade higher, right? And that's where we're at today. So that's one of those candle 2 closures that doesn't validate the change in the state of delivery until here. And so with that, if you could follow the flowchart, if anyone has the flowchart on you, you can take a look. It'll say we have an idea. Well, we have an idea. Do we have a candle closure? We do. Do we have a change in the state of delivery? Well, at the close, we didn't, right? So then you have to wait. Here we have the change in the state of delivery. Then it's valid to be looking for entries, right? And if you take a look, once we have this change in the state of delivery, it validates this low. But just intraday here, do we have anything else? Right, you see how we sweep out this low, we reach into this fair value gap, and then we close over these down close candles, So that paired with refining it down, I know if price is going to trade higher in here, it won't go take out this low, right? Does that make sense? How you can refine that down? Yeah, exactly. Let me copy and paste that. Right, so if we're looking at this, we have an idea. Do we have a candle to closure? Yes. Do we have a change in the state delivery at the close? No. So we can't go look for an entry on the start of this candle. We have to wait. Do we have a lower time frame change in state delivery in candle 3? We do right here. So then I can look for entries in this higher time frame candle, right? And then I just showed you kind of how you can narrow down invalidations using the hourly chart. Do you need to see a liquidity sweep on the lower time frame before entering? You do not have to. The main thing I focus on is invalidation, right? So here, once we close like this, I know I don't want price to go, let me grab an emoji. I know I don't want price to go here, right? Because when we close over this, validating it as an order block, I don't anticipate price to go to here. Now I can also mark out the mean threshold or 0.5 of this because I don't anticipate price to trade below that if I'm correct, right? Now, how do I refine it down on the hourly chart is I look for price to either sweep or reach into a fair value gap and then close over down close candles. So right here we have a fair value gap. Let me grab it. Do we close over down close candles? Yes, we do here, right? So now I can anticipate this to hold, right? And then do we have a reach and sweep out a low or in a fair value gap? We sweep out a low here. We're in a fair value gap here. Do we close over the down close candles? We do. So now I anticipate this to hold price if we're going to go higher, right? And then technically, this wouldn't be a valid order block in my eyes just because of mechanically it's not. But now we've started to expand higher and we've taken out that Monday high or the opening price, right? What if you get a CISD and ICSD at the same time? Let's take a look and I'll talk about it. So we're going to throw up an image on here, go over it. So here you have one where do we have, let's go through the flow chart again. We have a candle to closure, right? So the next thing we check, do we have a change in the state delivery? Well, at the candle to closure, we don't, right? We've never closed below here. So then I'm waiting. My first step is always waiting for a close below this level. So here's where we finally get that close below this level. Now from this, I know my invalidation can be here, but just as I did here, I can lower it, right? So do we have any sweeps of highs that are marked out that I could lower it? Well, for the sake of the example, no, we don't because this was equal highs, right? So I still need my invalidation here. Let's say this candle would have swept there, right? And then closed below there. Now I can have my stop loss right there and refining it down. Does that make sense? It's always waiting for the confirmation or the change in the state delivery in candle 2. And then from there, I can refine it down. All right, perfect. Glad that makes sense. I know we've gone over a couple of those examples, but they're always good to have. Yeah, this is the daily and hourly fractal. That's what I prefer. I use daily, hour, hour 5. Let's see. I know there's another question from Kaz, so let's get over there. I have some uncertainty on what to look for at 8:30 or 9:30 on days like today with a red folder news release. Would you talk through the manipulation you'd ideally want to see on a potential continuation day? Are you looking for more a move away from your bias? Yeah, that is correct. So let's hop into here and we'll go back on we'll go to the 5-minute. Right, so the main thing that I want to use is daily profiles, right? So if I have a bearish bias, right, there's kind of 2 things I'm looking for. Let me see if I can draw this out for you. I use 8:30, 9:30, and 10 as those important levels, right? So if I have a bearish bias, there's a few things I want to do. Is my invalidations are always based off of opposing candles, right? So if 8:30 was to make a run higher, right, and then form an opposing candle, that then gives me an invalidation for 9:30 or that future price action, right? So let's say that's 8:30. We're actually going to draw this out a little better so I can, oops, we'll draw this out better so people can actually get more value from it. So let me do 8:30 here. 8:30, make it a little bigger so everyone can see. Command 9:30, and then we'll put 10 here. So I kind of think of these three working together at times, right? So we'll move those down. So let's say my bias is bearish, right? And I have 8:30, 9:30, and 10 within the daily profile. Now this is going off of, you already understand what we are looking for is either mainly two daily profiles. I'm either looking for London to form that high and that reversal, which in here we'd have a change in the state of delivery. All right, so let's say this is, let's see, not sure why that's not adjusting. Okay, interesting. So let's say we have a change in the state of delivery here in London, then I'd be anticipating that New York continuation, which is what you are talking about in this example. So let's say we have that, and go adjust this one more time. And then we go into the New York session, and there's kind of three things I look for. As the first, I'm always going to be what happens at 8:30. And with this, it's either 8:30 makes an opposing run, which then forms another order block, which then gives me the ability to move my invalidation from this London high down into here, right? And with that, let's say we put that there, then I would be anticipating 9:30 to continue off of that, right? And then at 10, it either enters a new phase of price or continues, right? So it's either going to continue lower, it's going to reverse, or consolidate, right? So I kind of view that as the timing for that. Now let's take a look at a different scenario here is, let's say 8:30, right, just consolidates, right? Well, where would my stop need to be still? It would still need to be on London high because I don't have any invalidation in here, right? So if 8:30 consolidates, then I am generally looking for 9:30 to manipulate 8:30's range, or that kind of early morning range, to then have the change in the state of delivery. And then what would I expect at 10? That to continue, right? So I always look at 8:30 first. If it makes that manipulation, I can anticipate 9:30 to continue. If it doesn't, or doesn't give any invalidation or any idea and consolidates, then I'm expecting, I can draw it out for you guys, is more of that AMD, right? Which I think anyone who trades the unicorn model, or you see all those, that's like their favorite because it's very obvious with 9:30 making an opposing run. But the other example is either 8:30. I mean, there's quite a few variations of this that can happen. A lot of times 8:30 can just be the one that moves lower. Then I want to, if you think of the expansion already happened, 9:30 can enter a new phase of price, right? So then that can either go lower, or it can consolidate, or it can reverse, right? And so you've probably seen those profiles where we get a London reversal, it drops into it, and then 9:30 goes like that. So it takes a bit of studying, but you kind of add them all together. So for an example today, right? What do we have? Well, we're on silver. So, random ticker. Let's take a look. Silver. If we have our daily profile marked out, let's do that. Here we're on the 15. It's not very super clear. I prefer London to make the high, but you see we have Asia forming a high, right? We're trending lower. London does form a reversal here, these opposing candles. And if we just track those, what do we get? If we're bearish, right? So let's say we are bearish, we're anticipating a continuation lower. What do we get on, I gotta put my time on there. What do we get on 8:30, right? Well, 8:30 opens and makes an opposing run. So if we go on a slightly lower time frame, this will be an up close candle, right? Or you can use that whole series if you want. But that is what gives that opposing run for 8:30 to then go lower. and then 930 is what makes that reversal. Let's go to ES because it's gonna be a lot better example. Thought I had my time in this as well, but I guess I don't. So we'll do one thing really quick. All right. So here is our daily candle with the time. And you notice this is not a very clean London structure, right? You see that? But we do have this open, makes a high. We have a change in the state of delivery, right? And then London starts to continue. So if we think this is going to continue into New York, what do we think happens? Well, I want to see at 8:30. 8:30, we either make an opposing run to form an invalidation, which did it. No, 8:30 just moved us lower, right? So then 9:30, I can think, what? We can either expand lower or we can form a reversal. And this is not a great example of it, but 9:30 is that move lower that then reverses, right? It's kind of that last example I was talking about. So it's not always going to be perfect, but if you study those times together, it can be pretty helpful. My favorite personally is when we have 8:30 make a high, right? And then I can be onside in New York with my stop on that high, then trade it lower. So like right here, there's nowhere really for me to get onside. If I'm onside here in New York, I would have to have my stop kind of above this 820 high, right? Which doesn't really make sense in terms of risk to reward for me, just with the day, because not super London price, clean London price action, extend lower. So if I was going to trade this, I would have had to wait for 9:30. What does 9:30 tell us in terms of information? Let's replay it. Well, here's 8:30. I don't know why it did that. I was going to do this thing where it doesn't let me replay. All right, well, that sucks. But anyways, 8:30 doesn't really give us a whole lot of information, other than it does run higher, respects to this wick, continues lower. So I don't really trust that to just hold during the open, right? It could whipsaw or take out all these highs. So then on the open, I would have to wait for something. What happens at 9:30? We sweep out here. And if you notice, we also have an SMT there. And then we get a closure below the opposing candle here. So that would be the only framework for the morning for me, which I did not take. I did not really like it. But that's kind of how I use 8:30, 9:30, and then 10, right? And so then you wait 9:30. What happens? Well, this is a pretty clear reversal. Then 10 is a continuation of that reversal. All right, hopefully that made sense. If you have more exact specific questions on that, I can probably go a little deeper. That's like a broad overview. So if you watch my time video on YouTube, and then think about it that way, that will be probably more helpful. Yo, how's it going, Shin? Lately, with the current price action, not a lot of trades with this model, of course. Out of control, has to be patient. How many trades a day, week do you usually have with this model? When I'm trading specifically daily, candle 3 or 4, and then the same thing on the hourly or the daily profile, it's normally like 1 to 2 a week. Lately, it's been a lot less. Or like, you know, if you look 4 months ago, it was a lot more because it was very clear. Like if we go, let's pull up our daily charts here, right? Kind of ever since this price action, there hasn't really been a lot of model, right? If you look, where do we form swing points? It's just not very clear, right? Like there's really just not there in terms of my model, which is fine, right? But if you go back to like here, right, you see how it's just a lot more clear in terms of the swing points in the runs. I think February on, where are we at? It was like this price section over here was some of my favorite. Maybe I'm too far. Oh, I'm on ES, that's why I don't recognize it. I was like, where am I? Like this was some of my favorite price action in here because if you just look at these swing points, right? these were just very fun to trade, right? And you can see reversal day, continuation, reversal day, continuation. This one was a Monday, but reversal day, continuation, continuation off that. Reversal day, continuation, reversal or candle 3 closure, continuation. So it's like, it's not super clean right now on the daily. So I'm hoping post-election maybe that will clear up. But if not, I can still, if I really wanted to trade it, like with adjusting a little, I would just not be directly focused on trading the candle 3 and 4 on the daily, and just more so general overview on the direction, and then aligning the lower time frame model with that. I actually took this L on the 1 hour 5 minute on gold. Can you let me know if it was a valid setup? Price went my way, just took me out. Well, let's go take a look at gold. And pull it up here. Here actually. So here we are on gold. The one thing I didn't like about gold is we don't have a swing point at all up into here. So really, it's hard to try to fight a bullish trend like this. That's kind of what I mentioned here. But I'm more interested in trying to trade this back into the range later this week, because that's when you can get a move where it's like, if you have all these failure swings lined up, that's when you can get an aggressive move to take those out. But just being bullish, right? So this is what I mean, is you can still look for opportunities even though it's not candle 3 or 4. So for instance, here's our swing point. That would be 3. This would be 4. Not very clean. We haven't formed a swing low. But if you're just bullish into this day, I haven't even looked at your trade yet, so we can go see what day it is. But I'm assuming you were taking this setup in here. Let's see, right at 8 a.m. So you're looking at the 9 a.m. to trade higher. Let me take a look. Oh, you were trading the hourly. My bad. Oh yeah. 8 a.m. Wait, maybe give me a second. 29th. Oh, is this? Oh, is this day? The 29th. Is it? Oh, yesterday. All right, cool. Well, we'll see. We can go look at that later. So then with this, I'm guessing here. Right, so in there. All right, let's replay it. So the way I view this is, I'm not a fan of the daily profile, because if we take a look, we just consolidated and then just expanded and then consolidated, right? So I'm just not a huge fan of that. I'd prefer those to have gotten swiped out, then it's a lot easier to trust it. But viewing this, we're into 7. I view this as a consolidation range. So if we've taken out this side of the range with a candle 2 closure, then it would be possible, right, to look or frame longs. Now with this, you generally want to see 0.5 of that be respected. Then we'll drop to the 5 minute. Do we have, let's see, cool, it's letting me replay. We have a change in the state of delivery there. We'd want to see this area be respected. So with this idea in mind, generally I want to see price respect that area to trade higher here. So let's see. We're waiting for a intra-candle change in the state of delivery. That would be a possible entry if you wanted a candle 2 closure entry, but waiting for confirmation. That was the entry. Let me see your entry. So you took a candle. Yeah, that's a very valid entry. Super valid. Like that's very valid. I would not say you did anything wrong. That is a valid loss, 100%. Because that's exactly where you'd anticipate the low to form in this expansion if it was going to expand. So if you took that, like that's just a loss you take. The only thing you could probably say, I don't know, we'll see what happens here, is if it swipes again, the only thing you could say is like, yeah, it's a consolidation. I could widen my stop a little, or wait for the intra-candle change in state of delivery. So what he was saying is he took an entry here, stop there, other side of the range, and expansion, right? And I would say that's a very valid entry, right? But if you notice, we can't get that yet. Just consolidation in this candle. We have now made a new low. would have to close over that to go higher now. Now in this case, if it closes over that, it's just got to respect that area, trade higher. Yeah, and it does that, forms another one. So I'd say, yeah, that's a completely valid entry and loss. Yeah, so you got taken out there. Yeah, super valid. I mean, we can talk about ways to mitigate that using this candle, but I think it's better for most people to not try to actively micromanage their positions like that. So that's why I think if you want, we can DM about it and I'll tell you a few things, but I don't really want to talk about it on here because I think it will do more harm than good with that. But that's a completely valid entry. That's almost my A plus like lower time frame structure. So let's see. Let me get to the other questions now. If I'm trading the hourly fractal and only a couple trades per week, if any, should I size up on my positions? Is it worth also to trade the one shot, one kill model alongside it? So the only difference really between trading the hourly fractal, so we can use oil as an example today. I think that one might be fair. So if I was trading the daily and hourly fractal, I would just be long in here essentially, right, with my stop in here. Sure, something like that. It's actually pretty perfect. So like that's an example of an hourly model. If I was going to trade this as a one shot, one kill model, what I'd do is I'd use this as my bias and then I would drop slightly lower. So let's say the 15 in here. And then I could look for a setup in here on the 15-minute chart, right? So the only difference between those two is with the one shot, one kill or going lower, you can get some more risk to reward. But as you can see on this example here, it's almost less clean on here, right? So like, it's almost like I'm more prone to possibly getting stopped out than actually just improving my risk to reward, right? So there's kind of a balance between those two. So for instance, what I do is I personally try to focus on like the hourly charts with other assets. And then with my main focus of indices, that's when I go a little bit lower into that one shot, one kill. But I think everyone just tends to find their groove with that after studying the model for a while and finding what works for them. Because I know there's some people who they trade the hourly fractal and they don't even go to the 5-minute chart. They just take their entries on the hourly, right? So you can take it and adjust it to fit your own personality. As for size, that is dependent on, I definitely size more on like my normal size on my normal setups. If I'm going to take something that's more high frequency, then I do use less risk. So this is similar to what you did the day you traded with Tanya and DD streamed. I think I remember you anticipated a bullish move and then used the 10 a.m. candle wick lower to enter and exit. Yeah. I don't know which example I was referring to here. Maybe was I talking about gold, or where was I? What was I talking about there? So I can go over it. Sorry, I'm a little behind on the questions in here. Maybe you were asking about gold. Maybe gold in there. No, that's not it. So it'd be 10. Essentially, it's what I was talking about on the like public YouTube stream was essentially I was hinting at what I was doing without saying anything, right? Because I'm not trying to just give away my model to everyone. Like I'll teach them, but I'm not going to be like, hey, I'm using the 10 a.m. open as a new hourly candle where I'm looking for an intra-candle change in the state of delivery. And, oh, I know exactly where you're talking about here. Yeah, so I did the same thing here, is when this candle opened, right? If I was anticipating a low to form in here, I could limit order, right? Is that what you mean? Let's see. I don't know. If you get back to me on that, we'll cover it. 2 questions. Do you only trade your fractal model or do you mix it up like propulsion block off of A3930? I mean, generally that's gonna be within my model. So for instance, like today, say we'll use like a 5 minute. I don't know if that's a great example. Or yeah, we can just use oil today, I think. Say oil 5 minute or 15. But if I'm already looking for a continuation, right? So for instance, let's say I'm trading this reversal here on the hourly. Let me see if I can replay it so it makes a little more sense. Right, so if I'm trading this candle to closure technically, or waiting for the next one, I'm still waiting for that to close over there. When I wait for this intra-candle change in the state of delivery, if it touches that, that's a propulsion block. So it's not like I'm using a different concept or model. It's just, it aligns with my model, right? That makes sense? So I think someone I know took that today. So it's not like I'm just completely, oh, I'm going to disregard my model. It's, I let the reversal form. If a propulsion block forms, it's most likely in line with my model because this would be the reversal candle. And then this would be the intra-candle change in state of delivery generally. Like if you go study that, most of the time when you're trading that intra-candle change in state of delivery, it's either a propulsion block or like very close to being one. All right. Do you ever trade failed candle 2? We've talked about this a couple times. If candle 2 is going to fail, then that high or low is going to get taken out. I will occasionally do that. I just don't like to talk about it once again because of how it can just confuse people. So for instance, trying to find an example, I think it was, see if I can find one. Trying to find like a very easy example. We'll just use this one, right? Because it's a decent one. So we have a candle 2 closure here. If we're going to respect 0.5 of that wick to trade it higher, right? And if I go to the hourly, price needs to respect 0.5 of this wick to trade it higher, right? And I like to use, right here, wait, I need to change that, right? So if it's going to respect 0.5 of this wick, we'll extend it over into here to trade it higher. If it doesn't, then sorry, messed it up. So basically the thought process is price would have to respect this area, right, to trade it higher. If it doesn't and it's going to fail, where is it going to go? There's only one other option unless it's consolidation, right? So if it doesn't do this and it doesn't consolidate, where do we go? Someone answer that. Sell side liquidity, yes. Now what is this sell side liquidity? It's always going to be candle 2's low or candle 2's high, right? So when the model fails, candle 2 is always the drawn liquidity, right? So that's what it would be, is trading the invalidation of it, right? So you can see that, which was the open on that one Tuesday or London, right? But the thing is, I haven't really talked about that because I'm not trying to confuse people, because when you're trying to look for one thing and then you're saying, oh, if it fails, I can do the other, people are going to get overwhelmed. So that's why I personally just don't really talk about it. That's something you'll pick up on by yourself as you learn. So I wouldn't, for those of you that don't really know about this, I just wouldn't pay attention to this section, what I just talked about there. It's cool to know, but when you start to try to flip your bias back and forth, what happens when it goes like this and you're like, oh, it's going to fail, and then you had the right bias, right? And then you get all confused. It's a lot easier to just stay with one mechanical way of going about things for most people. All right, let me get to the next questions. Does the 8:30, 9:30, and 10 also affect commodities? Not really as much. The main reason for 9:30 is the NYSE open. For 10 a.m., if you just focus on whatever the higher time frame candle's open is, so that new 4-hour candle, that will be that number. And then 8:30 does impact stuff related to the dollar. Is this a valid setup? Let me know your thoughts. Let's go take a look at it. What is that? CHF, JPY. Is the dollar consolidating? Let me take a look real quick. So the one thing I would say about trading exotics like this is if the dollar is not consolidating, you're probably going to get some pretty crappy price action on exotics a lot of the times, right? Unless you're focusing on looking at individual futures charts and then pairing the currencies together, it's usually better to focus on majors when the dollar is actually moving. But let's go take a look at it for you. CHF, JPY, right? So actually some pretty decent price action on this for the most part. It looks like you were trading this higher. Is this today? Thursday? Thursday. Oh yeah, so that's today, right? So I'm just guessing you were saying, okay, we have this strong bullish candle looking, that's kind of tough, but let's say you're bullish today. I'm guessing that was the bias. You go down to the hourly. Let's go take a look. So hourly candle here. You can see the first thing that throws me off is we just had a single day's candle that took out the range of the past 14 days in one candle. So that is something where I consider, hey, we might go into a new phase of price or some sort of consolidation as large ranges lead into small ranges. But going to take a look at it, we do reach lower, we do close over that. So if you're considering this as the wick of the daily candle, sure. We expand higher, now we're just in a range. Now personally with range trading, I just like to mark out the higher low and wait for a sweep, which we haven't really done. But if you consider this range, right, sure, you can take a look at this candle as a long or this candle as a long. And it looks like you did the hourly. Am I on the right chart? CHF, JPY. I'm thinking. Oh, okay, yeah, hourly and then 5 minute. Maybe I'm on a different broker because this does not look the same. Thursday, October. Am I completely off on this? Where am I? Iran, do you want to tell me what broker you're using? CHF, JPY? So I'm seeing at noon, 1 hour. Maybe it's a different day. Can't really tell. 30th. Oh, it's a different day. That's why I'm very confused. Is it? Oh, I'm on replay. I'm sorry, I'm just very confused. I'm like, why was I there? All right, we're here. I guess I was on replay mode and that really threw me off. Anyways. Yeah, that makes a little more sense now. Large range, we do get an expansion, but here we are just in this range. Now, if we're going, sorry about that, guys. We are actually on this price action. If we're just viewing this as price action here, from the daily standpoint, there's no setup as we have just made a range here and we haven't taken out a higher low of the range. The only thing that could be considered is if we close like this to trade that higher. However, does not look like you're using the daily time frame, or at least within my model. So we'll drop down to the hourly here. Take a look. Just with a lack of bias and viewing this as a consolidation, it's not a whole lot other than sure when we sweep out highs or sweep out lows or reach the higher low of the range, form those candle closures. So you were viewing this as an hourly change in the state of delivery. Sure. And then looking to trade the following candle. Now, the one thing is we're not really in a bullish or bearish trend, right? It's consolidation. But if you're looking to trade this following candle, let's go take a look. Drop here. The replay has been giving me problems. Right there. That's our sweep, our candle 2 closure. That is our change in the state of delivery on the hourly. So you were waiting for this, right? Now the easiest way to, oh, you entered here. Okay. Wait, I'm confused. Where did you actually take entry in that? Did you enter in this candle or did you enter in this candle using this level first? So you actually entered just, okay. So I'm confused how you got that entry. Let's see. Hold up. So you just straight up entered this. Oh, I see. So you just entered there. And then where was your stop? Just somewhere here. All right. So the first thing I can point out here, we'll do a few reviews, is I am not a fan of having my stop loss in kind of a random area, right? I also am not a fan of having my stop loss at a candle that has no wick, because I like to see those get taken out, right? So that is an idea there. If I'm just going to be entering there, right? If I'm using this as my change in state delivery, my stop's just going on that low, right? Right, there's no reason for me to widen that. If I actually wanted it wider, then I'm going to go find a swing lower in opposing candle, right? So then I'd have it down here. That makes sense. But on the idea of the trade, let's talk about a few things here. And we'll actually replay and hope it works. So we have a change in the state delivery, right? Technically, with that candle there. What do we notice? If I'm trying to position myself in an expansion candle here, I don't really want to position myself in it after it expanded, right? So if you're entering here, if we notice this candle already, okay, let me rephrase this. I'm wanting to position myself around the wick or the open of the higher time frame candle, right? That is my model. I'm waiting for the wick to form, and then I'm trying to catch the expansion, right? What do we notice about this candle here? It already had its expansion, right? It already expanded. Sure, it can expand to here, but I want to be in around in here, right? So to me, it doesn't really, and I also want to be in the early parts of the candle, right? And that's kind of going back to that we only have a certain amount of time and a certain amount of range. So if I'm not kind of in this early section of the candle and around this price in here, I'm not really trying to enter after we already took out this previous candle's high over here, right? And we're already halfway through the candle. So we're saying in a half a candle, we're going to expand higher. It's more likely to wait for another candle. So as we let this continue, I can understand that entry there, but I would rather wait for the next candle, right? And then on the next candle, we have a nice bullish candle. If we're going to respect half of that, it's already up on the chart there, that dotted line. We can wait and see, do we respect it? Okay, well, if price is reacting here, I'd need to close over there to get a change in state delivery. That doesn't really make sense, right? There's no real risk to reward there for me if I'm entering up there, stop in there. And if you notice, generally, this is going back to our lesson at the start of the stream. If we're gonna reach all the way down here, right, we're using a lot of our range, right? And we already went higher first, right? So are we gonna do this and then go expand? It's more likely to wait for another candle, right? That's kind of how I think about it. But we look, we go lower, not really respecting that 0.5. But what do we notice at the start of this candle? We have now had a change in the state delivery, right? So this is where it can make more sense to be looking for an entry because I have my invalidation here, right? If I enter on the start of that candle or there, or if that doesn't make sense to me, I can wait to see if we have a retracement back towards that opening price, right? Because then that makes a little more sense to target in this range, right? So then let's see if I get filled, but don't on that. So it's like, that's something I probably just miss, right? But does that kind of make sense why I don't like that kind of entry, or at least the stop loss placement? Like if I'm just trying to enter in the high of the candle, it just doesn't really make sense to have my stop at the midpoint of the candle where my requirements are, if this candle closes higher, it has to respect 0.5 of that. And my 0.5 is around my stop loss. Not sure if that makes sense. I don't really watch Forex, so it's very choppy to me. So that's kind of a tough one. But hopefully you found something helpful out of that. It would have been a lot easier if this candle right here closed over that, and then you can just trade the open of that. Might stop on that low. But hopefully that kind of makes sense in terms of like what directions you have candles. And also, if we go to the daily, there's just nothing super clean in this daily range. Like we're just in a range here. If I was going to trade this asset, I would have alerts set on this high and this low, and I just wait. Right? It's kind of like when we enter a consolidation range. See if I can get this. Alerts on the high and low and wait. Oh, there we go. Possible entry. Looks like it fails. And then equal lows. Very, like I would not have done well in this price action. But let's get to a few other questions. That was the entry. Okay, thanks. You can always use protected low as your stop. Yeah. Hey T, I took this trade today on EU. It was a winner, but I was wondering if I did things correctly here or did I get lucky? One thing that stands out is my projection was way off. Well, let's take a look. Euro USD. I don't know if you have a... Okay. Do we have SMT on the low? Does anyone know? Guess we can take a look at DXY real quick. Okay, we do. So this is valid because if you go to my opposing candle section, right? The only time I don't need a low swept out for an opposing candle formation or for a setup here is when we have SMT. So then we have a candle to closure. I can look long into here. Oh, you shorted. Okay, cool. But anyways, oh, I'm on replay mode. Oh no, we're still there. Anyways, I would be bullish today. Sorry, I like to not look at the examples and then just go through it myself to see if we're on the same path. But hourly here, right? The way I view this is it is bullish to me. I view this as just consolidation. So then it looks like we get like a London close reversal. I'm not trying to long. Let's talk about this as a good example. Why would I not? Let's talk about this. Why would I not be trying to long this in here? Like that. Can anyone tell me that? High is taken, yeah. So a lot of times when we take out a bunch of liquidity, in this case, multiple days previous highs, right? We're gonna get a retracement, right? So that's when it makes sense to go take out some lows too, right? Now the main thing I notice here is we have consolidation, aggressive down. This is trapping people. And then aggressive back up, right? So that V-shaped reversal. But with this, if we take out a bunch of highs and we're anticipating a retracement down, I'll add this in there because I know a few of you follow me on Twitter. We have liquidity resting right around equilibrium of the range. Cool. But even if I had this idea of the fair value gap, I'd want to see if a swing forms. And no, right? So there's nothing there. So I'm guessing you said you took this short setup here, which is very valid, right? So the one time you can counter that daily bias is when you have some sort of narrative like, hey, I just took out multiple previous day's highs. We have a candle through closure. And then you took the short setup. You take two. Okay. I see. So candle through closure. We'll drop down to the 5, and then we'll finish this example off. So here, right, we have a change in the state delivery there. We close. So then I'd anticipate 0.5 of this being respected, which is quite the range. But this is the area I would be looking for highs to form because that's from our open, right? The high is not going to form below the open. So this is kind of the area I need price to form. And then from there, I can wait for another intra-candle change in the state delivery, which we get there, and I could take an entry like so. There's 2R, or you can hold to these lows. And the entry you took was also perfect as well, because you can also consider this full move up, right? So from this low to that high, which is what you did. And then you use that as your change in the state of delivery. It looks like you waited for a retest, or you just entered on the close. You had your stop at the correct spot. and then you targeted 2R or these lows. So yeah, that's completely valid. Now, in terms of the projections, when we have something like this, that doesn't make sense, right? Because think about the range. If our range from this current low to that high, it doesn't really make sense to use a projection like that, right? So this is where I'll either go down to the lower time frame, so I can use a 1 minute, find the swing high after this, right? So it still doesn't make sense to use this. So then I can go from the high and look for the swing low. There we go. And if you go back now, and we'll extend the coordinates on this real quick, make it a little bigger. See how that makes a lot more sense in terms of the range for those targets? There, there. Does that help with your projections? If it doesn't make sense on this time frame, you can drop lower, right? A lot of times that will actually just be this 5-minute candle. So you can sometimes just do that. But that hopefully that helps you. My bias was also bullish because the SMT, but I saw candle 2 closer and shorted. Cool. Yeah, I mean, that's fine. Now, if we were to look at this in the bullish perspective, if we're going to form a low down here, what would we need to respect? 0.5 of these candles, right? So this area, we can leave that on there if we want, but this area we need to form swing. So then I wait, and that technically formed a candle 3 closure all at once. Now validates this low. So if we're going to trade higher, this low shouldn't get hit, right? And then it's very choppy. I'm not a fan of this. Like if this happens, I'm not going to trade this next candle. But yeah, that's a completely valid setup. I wouldn't say there's anything lucky about that. It's just you followed the process and it worked that time, right? You can completely follow a process and not have it work. That's also good. Right? It's just following the process. See you later, Shin. Have a good work meeting. But yeah, I see how you did it. That's a completely valid setup right there. Yeah, no, that's what these streams are for. You don't have to. They're just here for me to help you and answer your questions. So always here. All right, let's get back to the last questions. T, what are your thoughts on stat map? Seeing that we're pretty much all looking at open, high, low, close. So I haven't really tested it much for myself. However, once I get my model coded up, I can probably take a look at and see how they interact. It's just, you guys all know how I define where I want to see manipulation and like what areas I want to be see held, right? So I kind of do that within my model without using the actual statistics from that. So I'm not sure. We can throw it on, right? So here's an example of it on the Euro one we just went over, right? So you can see similar, see this manipulation level. Well, where would I want to see that held? Well, I just use 0.5 of this and then that area, right? So it's kind of the same area, right? To hold that. I guess maybe you could narrow it down. I haven't really messed with it, so I don't know. If I was to use it, I would probably just use it for distribution or like where my targets are for the day. So let's see. Maybe we can replay it a few times. Just see what shows up. There's my distribution. So that would be my like targets for each daily range. Let's see. It's getting pretty close there. Not bad. It's just not something I have used yet. Oh, that one's pretty sick. Hit there exactly. Right? Oh, that one hit too. So I think it could be good. I've just never used it or never messed with it. So, talking about Jeremiah, if you want to put all that question together, I'm kind of, because I get ahead and then I forget where I was talking. The daily hourly fractals, do you find that you're holding trades overnight or you in and out before New Year close? For me, it would be overnight, not more so it's like you would be entering in Asia, right? So for instance, let's say I'm like taking a trade on euro here long, just positionally. Where do I need my stop? Well, I don't want to see price trade below there, right? So something like that, right? And then I would be entering that in the after the close or the open of the new daily candle. Then I would be in that trade overnight, right? But a lot of the times I'm not holding that through the new day, right? You will have to at some point. Like if let's say this just does nothing, sure. Um, if I was anticipating trading as per candle 3 closure here, would it be a good idea to avoid as it had a large upper wick? Yeah, so I'm not a fan of that. Just because, let's see, that's on NQ today. Let's go to NQ on the hourly. Pull it up. So you're asking, hey, if I'm trying to trade this candle 3 bullish, would you avoid it? And my answer would be yes. Let's talk about it. You're viewing this as 1, 2, 3. Now with candle 3, we want to see a nice bullish closure, right? Does this close bullish? No. If bullish closure is like up in the highs, right? Like a very aggressive candle, right? Like see how that's closes in the lows, that closes in the highs, closes in the lows, closes in the lows. That's what I want to see. So a nice close in the high. So this is not something I'd be thinking long, really, right? The next thing is I would want to use 0.5 of this candle to be respected to continue higher if it was a candle pre-closure. If price is opening below that level, that doesn't make sense to have it respected to go higher. Does that make sense? It's actually kind of impossible for it to respect it and it opens below it. So hopefully that makes sense, Caesar. Also the OG chart colors, if anyone followed my YouTube for like a long time, those are those. If you get two opposing candle 2 formations right after each other, one bullish, one bearish, would you stay in the trade or look to close it? It's kind of tough. That is more dependent on bias. Let me see if I can find one. It's basically what candlestick traders call a hammer counter shooter, or like basically you have a hammer candle that is then countered by a shooter candle, because that's essentially what my model trades. I'm trying to find one. But what I mean is, let's say I'm bullish bias, right? And then I have a shooter candle, right? Or a bearish candle 2 closure. I'm expecting price to go lower, right? If it goes lower and closes back up and forms a bullish candle 2 closure up, well, if my bias is already up, and let's say we took a previous day low, then I would anticipate that to continue higher, right? So it wouldn't really scare me out. I think if you're talking about just in the trade on the lower time frames, I don't try to make decisions for my higher time frame narrative off of like a 5-minute chart. So for instance, if I'm in, let's even go back to euro, right? Like in euro, if we're trending higher here, I'm not gonna say, hey, we just had this trend higher. My target is this high, but because we had this bearish candle here, I'm exiting all my position. You know what I mean? Like that's just saying I don't trust my actual narrative. So let's see. So if you have an example, that'll be a lot easier for me to help you. We are bearish and the candle is not doing open high low close in lower time frame to confirm an OP and just drops. But in the previous candle would be an up close candle so that the drop forms an OB. Yeah, in that scenario, if I have a protected high formed at the open of the candle, that's when I can enter just at the open of the candle. Trying to think of a scenario. Maybe we'll have one if I just randomly open up a chart here. 5-minute, well, we're on a 5-minute. So yeah, it would be, nope, that one forms. Yeah, if you know what I mean there. Otherwise, I think I'm gonna spend a minute looking for an example. All right, let's see. How's it going, KM? Is this valid? Taken at 9 a.m. on gold. Let's go take a look. Here we are on gold, and we are going to today, which is actually good because I mentioned I'd be talking about this. So you're talking about 9 a.m. Valid candle to closure. So what do we notice though? Kind of in this consolidation. Swap out all these lows. This is a closure. So with this, I'm generally anticipating price to trade to this high, right? And then I want to focus if we close over this for the next candle. So then if we drop to the 5-minute, do we have a change in the state of delivery? We do. Now, who can tell me the one thing that already kind of puts me off to this trade, like something I don't like about it? Oh, it definitely closed strong, right? Like look at this. It opened here, closed all the way up in the highs. So it closed strong. Yeah, exactly. Candle 2 expanded, right? So you see how candle 2 made all this range, right? Generally with candle 2, I want to see price open, make a reversal, and then hang in here so then candle 3 can have the expansion, right? If it does both at once, that's when it can set up kind of consolidation conditions. Now with this, let's think mechanically, right? I'd want to see exactly open. I'd want to see this go lower first generally, right? So sweep out a low. There's nothing really in here to sweep out or reach into. So marking out 0.5 of this. Like it's just not super ideal. Let's see. We go there. I'm not liking those failure swings. And then it takes that high. This is just probably something I missed because let's say this. Let's say I'm in this trade here. Where is my trade invalidated? Right? Let's say I enter on the open. Where is it invalidated? Technically, I don't have an invalidation till like down here, like at a swing low, right? Or a protected high. So you see how I don't have anything to invalidate my trade, so it doesn't make sense unless I get an invalidation on the lower time frame. So now let's just do this how I would trade something is let's say mainly I'd be focused on this. Let's say price opens up, goes lower here, sweeps out in here, right? Then goes like that. That's when it makes a lot more sense because I'm viewing this as open, low, makes the wick of the daily or the hourly candle. Does that make sense? It just doesn't give me anything to invalidate my trade. So then here, once again, if I'm trying to enter around the wick or the open or in this early part of this candle, I'm not really interested after we already took out a high, right? And then we're having a move back lower. Now I want to see, yeah, that's very aggressive. I was going to say I wanted to see if we close outside this candle above this high or above that. So let's see. Wow, that is quite the drop. So that's how I would view this is there's just nothing that's setting up there for me to get long, right? And then after we take this high out and we just get an aggressive move lower, this candle just completely invalidates my idea because it's forming a bearish change in the state of delivery after taking this out. So now we have a bearish candle now we have a bearish candle 2 closure. So if this is gonna, it's just very, very choppy. Let's see. See if we can speed run this. Yeah, so then if you're bullish, that could be a long. Do it. See, this one makes more sense than this one even because it made a move lower, swept out a swing low, and then closed over here. But it's just, see how we, once again, we only have so much time. We used 40 minutes of it going nowhere. Are we going to use the last 15 minutes to expand? Not generally. Oh, and then that's where we're at right now. Nice. So hopefully that helps on how that could be avoided. If you are struggling with that concept specifically, I would go take a look at my intra-candle change in the stage delivery section of the course and the entry sequence, where we form a swing low, then close over, right? And I want to see that swing low at a point of interest. All right. Took this trade today. Could you review it real quick? Closed at 11:40 manually because of lack of volume. AUD JPY. Sure, let's pull it up. AUD JPY. A little longer stream today. Daily. Let's start on the daily like always. So, kind of the same thing is, what is this? This is kind of garbage, right? It's consolidation. So I guess you could frame it that way, where we sweep out this high or this low. But like with this, like why not focus on majors or something with the dollar that's moving? But this is not something I'd consider in my model on the daily, just because I don't trade the reversal candle generally, right? So I'd have to be waiting for this next day to try to trade it higher. But within your model or within yours, you're just viewing this as all right, let's take a look. So you're down here, drop to the hourly. Hopefully I'm on the right thing. So we do have that hourly change in the stage delivery. Cool. If I was to be trading this and I see us reach back into this propulsion block. Oh, you were just trading that. Cool. That works as well. So if you're trying to trade this, we validate the opposing candle. I know I'd want to see 0.5 of these bodies be respected. So the upper half, we have a fair value up in there. We reached lower. So you were looking to trade it in there, it seems. Let's double check your lower time frame. Yeah. So then inside there, you were using 15-minute. Sorry, this isn't my model, so I'm not as well versed. I'm kind of trying to figure out what you're all doing. So then you took a sweep of a low in here. And then you took this change in the state of delivery there. And then entered long. That's valid. You enter on the retest. And then I guess, oh, you closed out in here. I mean, that's valid. It's just, this is kind of a good example of why I don't prefer the reversal day. Is like, think about this. You're betting on this expansion, right? Price went boom, boom, boom. Is it really more likely to expand all of it today? Yes, there are some, as you've seen on candle 2, but it's more likely for me to see this expand the following day. So I think it's a valid trade within your model. It's not within my model. This would be trading the reversal day. If I was going to trade it within my model, it would be, you know, something like that. And then holding runners. But even my model would just say, hey, I'm looking on the next day for 0.5 of whatever this range is going to be respected. So then most likely price needs to hold this into tomorrow to continue expansion. Makes sense. No worries, gonna revisit important times video. Cool. I mean, oh wait, where? What different? It makes sense. Yeah. So I mean, the thing is think about it this way. This is what I was talking about earlier. If this would have opened up, let's say price opened here, then swept out previous day low, that's when we can get that expansion. But see how we formed too much of a wick for that expansion to occur? That's like what kind of throws me off. That's why if we would have closed down into here, that's when it can make sense to use it. Why the whole body is marked since we have a large wick? Think about it this way. This is when yes, we have a large wick, but if price is going to continue higher, we'll just give it two scenarios. Does it make sense for price to trade all the way back down into here and respect it to then go higher? Or would it make more sense to have it make this shallow run? right? So when we have price, when we have a wick, let's say we opened here, closed here, then I'd use the wick because price is opening up here. So then it could make a shallow run into the wick there. But if price is opening up all the way up here, it doesn't really make use to wick, right? So let's say price comes and closes right here, then yeah, I'll use the wick. Does that kind of make sense? But if it closes high, I don't want to see price go boop, boop, right? Because then once again, we've used too much range. All right, perfect. This month has been tough for me. I honestly think this month has been tough for a lot of people. Like it's not like, especially indices, it's just not very, at least in terms of daily continuations, it has not really been favorable. Like there, not one here. There's a continuation. Nothing in here. So it's like there's been a lot of sitting for indices, that is. Thanks for reviewing. I joined yesterday, so I'll be going through all the lessons in here and then adjust my strat. Perfect. Thanks for joining into the live stream, and let me know if you have any questions on the course material. But yeah, one thing you'll notice about my live streams is I can talk about any person's strategy. I am just going to be more well suited to talk about my model, as that's how I view price. So for instance, I sometimes get people, mostly in like the free Discord, that will just send me a random entry and they're like, "What are your thoughts on this?" And it's like I don't know what you want me to say. Like it's not my model, or so I can be a lot more help when it is within my framework, right? Because that's just how I've studied price. Appreciate it, Robert. Yeah, I would say the saved recordings are where you, I would say, clear up, or like these streams are where you can get most of your questions cleared up. So, but we are at, I was about to say 117 minutes, but we're not. An hour and 17 minutes. So if anyone has any final questions, oh, I think, wait, let's see, I'm gonna pause the recording. And so in my day-to-day journal, sorry, I restarted the recording. This is kind of what I do day to day, and I'm not looking to journal my trades in it, but just the daily price action. So it's like this is a blank one, but I'll go through it as I put my date in here, which is there, news, go through the news, my bias for each asset I watch, right? And then I say if I got the correct bias or not, so I can study that. Same with indices and oil. And then this is at the end of the day, what I do. But each little checklist I go through before the day is I just talk about my personal state. So if I have outside stuff going on, it usually bleeds into the market. So I try to be mindful of that, or possible distractions. Plan for the day. Generally, I know going into the day what I'm going to be focused on, right? What asset. And then this is just kind of my how I view risk management is I just give myself one shot at a setup. And if I take two separate losses, like I'm just completely done. And then always New York AM, as you guys know. Psychology, just a few things in here. Just like my emotions, if I have emotions come up, figuring out what triggered those emotions, if those emotions impacted my decision making, and then like what I did to manage those, and then if I can improve. And then for this is where I just take screenshots of the intraday price action on the new hour mark, right? So at 8 a.m., I'll take a screenshot of these, throw them up there at 9, 10, 11. And then that way I can review these days and see how they look. Recording, this is generally if I do take a trade, I will record it and then I'll go back and review it so I can see, because a lot of times you'll make decisions and then when you review them in a recording, I like to speed them up, but you review them in a recording, you're like, why did I make that decision? Like that doesn't make sense objectively. So then you can learn from that. And then these are generally, this is what I post in my analysis section. Generally, what I'm doing is like market anticipations. What am I anticipating the daily to look like? What I'm anticipating the weekly profile to look like, and kind of the scenarios I go through. And I do that for each of these. And then let's say I have a focus on indices for the day. I'm just going to post all my intraday thoughts in here. And then post market journal. It's where I just mark up the charts at the end of the day, learn stuff. So that's kind of what I do for a day-to-day journal. I know I made that YouTube video on a daily journal. I've obviously expanded and added quite a bit. But I think that was a question for you. Geo. Hopefully that makes sense. So it's pretty helpful. Yeah. Just keeps you on top of certain things. Like these ones. Oh, I didn't get to these. So then at the end of the day, I'll go to lessons. And then this is if I learned anything like strategy wise or like price action wise. Right? So within my model, if I'm like, hey, I noticed this thing, I write it down. Or then any other lessons. And then this is kind of just like how I've been doing in comparison to everything else. And then really focusing on the benefit or like the good qualities, right? And then this is just expressing gratitude, which is important. So that is essentially that. Let me pause the recording real quick. So that's kind of everything. I know you wanted that journal in there, so that's that. When do you review those journal entries? On the weekend? Yeah, either the weekend or like the thing is about in the Discord when I'm posting stuff, it's like I'm kind of reviewing it all the time or answering people's questions. See me expressing gratitude, I learn quick. That's hilarious. All right, share the template. I can probably figure out how to share it. Yeah. I think it is important to kind of make your own. Like I can give you guys screenshots of it, but if you make your own, you can add stuff that's more personal for yourself that you care more about. Like I basically just found a bunch of different other ones that I've seen people do and figured out what actually I care about to journal or write down. So, but with that, we are at like an hour and a half. So I'm going to go ahead and end that there. I do have another call coming up. So NASDAQ made an hourly opposite candle and 2 confirmation on CISD. I'm not really interested in the NASDAQ here. You could consider, I mean, I just consider this kind of consolidation. Like we're just trading this range. That's generally not something I'm trying to trade in here. Right? So that's where I lose money. So I stay away. But if we look at ES here, could definitely fall a little lower there. I don't know. Not a fan. And I don't watch price action after, like, normally after 11 or noon. So. Alright. I mean, yeah, you can. That's just not, like I said, that's just not something I really am doing price. I mean, I can go over why. We go back to MQ here. Look at this. We have change in the state of delivery this way. Which are we respecting? Well, we have to respect the lower half of this. We currently are. And then we also can use that or change in the state of delivery this way. We're also respecting the upper half kind of. Right, so it's like that's kind of a guess to me. Like, are you guessing on it? Like, if I had to guess, it's like, okay, go sweep out this low. But then, like, I don't know anything after that. And I don't like to trade guesses. So, anyways, I think we'll end that there. If you do have any other questions, you can just tag me in chat, and I will get to them. Hope you have a great rest of your day. I'll see you guys later.